That's right. We're all looking forward to a great summer. So talk to us. How is the buy sell market faring so far this year?
Well, we definitely saw a little bit of a slowdown in the first quarter. The transaction activity was down about 14% first quarter 2025 compared to 2024.
Okay.
And that's lower. If you look at it in a more broader standpoint, though, we had 300, we're annualizing at about 375 transactions, which is 70% higher than where we were pre-pandemic. So we're still in a elevated pace of activity.
Yeah.
Though it did slow a bit for sure in the first quarter. And I do think 2025 will be a slower year than 2024.
Okay.
Based on what we're seeing now, coming towards the end of the second quarter.
Okay. And is that due in large part because of the tariff situation?
I mean, the tariffs definitely are contributing to this quote unquote uncertainty.
Mm-hmm.
I will say we're not seeing buyers hesitate as much, quite honestly. I think sellers are a little more hesitant because they just don't want to sell in a market that isn't as strong. We still get buyers calling us all the time. It's saying what we're looking to grow.
Yeah.
And so that growth mentality is alive and well. What we see is that buyers are really saying, I need to be one of the top 150. So if I'm not in the top 150 list, I need to get there. And so a lot of folks are doubling down on their plans to grow. And those selling, I think, are just a little more hesitant to sell into the uncertainty of the market. I mean, how many times do we have to hear that term on the TV and the news wires? So I think as soon as the tariffs get ironed out, which I'm quite confident they will, we're going to see an uptick in activity.
Sure. Now that's kind of a large drop. What do you attribute the lower level of multi-store deals to?
So yeah, and that's right. We had fewer multi-store deals, and that was one of the drivers in terms of the slower, the fewer transactions. What we saw, fewer franchises, I should say.
Mm-hmm.
We actually saw there were 134 franchises that transacted in the first quarter of 25 versus 234 last year.
Oh, wow.
Now, part of that was the Leith transaction, which was 30 plus stores that we represented in the first quarter of last year.
Sure.
So that was a big chunk of stores. That being said, what we're seeing, interestingly, is the activity is definitely leaning more towards single store sellers. And part of that's, it's just harder and harder to just own one store. And so that has been a huge percentage. Almost 80% of the buy-sell market in the first quarter was single store transactions. Multi-dealership transactions were down about 39%. And I think that's because really those kind of deals, when you get into the Leith size deal with 30 plus stores, that you need a financial market that's much more stable. And
Okay.
if you look at the VIX, for instance, the volatility index of the stock market, it hit its 18th highest level on record in the first half of this year. You also have the Kerrigan index is down 20%. It hit a near-term high in February, dropped 20% with the tariff announcements and what have you. So it's harder for those huge deals to get done in more volatile markets in our experience.
Okay.
I expect, though, as we get clarity, and I do in the stock market and the public stocks improve, that we will see large transactions come to market.
Okay.
Again, we will see them get done. I mean, you're certainly seeing Asbury has said that they're going to close Herb Chambers deal in second quarter. That'll be about the same size as the Coons deal that we sold. And so those are monumental transactions. Mm-hmm. I expect we'll continue to see those, but I do think those super large deals are definitely sensitive to the financial markets and the stock market.
Yeah. So given the slow start to the year, how do you expect 2025 to shake out?
Well, as I said, I think it will probably be a little lower than 2020, than 2024. And that being said, I think that what we're going to see is, I think valuations are going to remain pretty strong. I mean, the first quarter earnings for the industry, from what we've seen on average in our analysis, that earnings were up 7%. And that was the first time we've had a year over year, quarter over quarter increase, meaning first quarter versus first quarter last year.
Sure.
Since the pandemic. We've been, since the peak of the pandemic, we've been on this march downward. So we're finally at a normalization. I think that's really